Good day, family. Welcome back to another video, and it is your boy once again, Legit Paul. So guys, as you saw the title of this video is all about how to analyze. So I'm just going to teach you a few steps of how to analyze the forex markets. It's just going to be a few steps. I'm not gonna take you through other time frames. It will be for a reason, and I'll also mention that reason. So please don't forget to hit that subscribe button, and please give this video a thumbs up. Yes guys, and don't forget to comment down below on how you think about this video, and if you didn't like this video, please give it a thumbs down, and also comment down below and tell me what I must do to upgrade my content. Okay, so guys, now we're looking at GBP JPY on the daily time frame. So basically over here we're going to use the daily time frame, or if you want also to use the weekly time frame, you can do so. It's not a trend smash. And we are also going to use the M15 time frame, or I can say the lower time frame from M15, M5 and M1 time frame. Okay, so we are on the daily time frame. Basically what we're going to be looking at on the daily time frame, we'll be looking at the daily low and also the daily high. Okay, and we're going to look at the structure and many more other things which I'll mention. So the reason why I'm not going to go to other time frames like the H4 time frame and the 1 hour time frame is because, as you know, that we're using the smart money concept, or we can say institutional trading, and we mostly use what we call order blocks. Please don't forget to go and check the previous video that I uploaded about other blocks, explaining everything about order blocks. And I've also created a playlist which will be a series all about order blocks. I'll be uploading more content on it. Okay guys, so as I was saying, that dealing mostly with order blocks. Okay, we're dealing mostly with order blocks, and there's a lot of other blocks on the market. So we might be looking at a weekly and a daily order block. Okay, then when we shift to our H4 and our H1 time frame, we see a very different move, and we see many other order blocks. Then when we go to the lower time frame, we are now confused and we do not know which other block must we use. And knowing that we must use which one, we must use the highest order block, or we can say the most important order block, which is the order block from the higher time frames. Or I can say those are the order blocks that I require, or the order blocks that I trade. Okay, and that I believe, which I find it less confusing, and you do not have to just go to other time frames, guys. So let's just look at our daily time frame. Okay, so let's just look at our daily time frame. As you can see on the daily time frame, guys, we have bullish momentum. Starting from over this point, we had a bullish momentum, a very bullish momentum, creating some higher highs and also higher lows. Okay, so we can see over here we broke this last big structure, and the market has been going to the upside, and from here we can see we have a break of structure, and we have already confirmed that we're in a bullish momentum. And over here we just broke structure, but we're just going to do what? We're just going to place our daily low, which is over here. This is our daily low over here, and this is a break of structure, and over here we have a break of structure, guys. So as you can see, we have our daily low and we have our break of structure. Then we can see over here that the market is still going to for now our daily high will be just over here, but we're not going to place it. Okay, so we can see, guys, this is a break of structure, and always after a break of structure, we're expecting the market to come back to it. We expect the market to come back to mitigate the previous point of interest or supply and demand, which is something new and something that you've never heard me speaking about. Okay, so we're expecting the market to come back to mitigate our point of interest that it has left, or our supply and or our demand. Okay, so you're just going to zoom in right now. So over here So it's either the market is going to mitigate this area, which is our demand area. Let's just pull it through to the side, which is our demand area, or the market is going to do what? The market is going to mitigate our order block, which is also called an SC. Okay, you know all the terms. If you watch the previous video, you can still go and watch the previous video and you will learn more about the order box. So over here we have our daily SC, which the market can come and mitigate our demand area and go to the upside, or the market can come and mitigate the daily SC and go to the upside. But I've noticed lately that the market mostly go with areas like this, because as you can see guys, we are on the daily time frame, so it will take just a lot for the market to get back and mitigate our daily SC. Okay, it will just take a lot. So most of the times I'm looking at these areas so that the market will actually come and mitigate. So guys, as you can see, this is how we are going to do our stuff. This is how we're going to do our analysis. We're looking at our daily time frame, then we go to, after looking at this, as we know that when the market comes to these areas, we are looking for possible buys. Okay, that's what we know now. That's what we must keep in our head, that when the market comes to this area, we must look for possible buys. Okay, but we are not going to take our trades on the daily time frame. We are going to be looking to take our trades in the M15 time frame. So basically, when the market comes to this area, we're just going to shift to our M15 time frame and look at our entry types. Okay, look at our setups which we take entries on. Then also, if on the M15 we have an entry type, which I'll do in another video, whereas I'll be showing you my entry types which I take, you'll be able to get a clearer view of what I'm speaking about when I say entry types. So when we go down to the M15 time frame, when the market has come to areas of demand or daily SC, that's where we're going to be looking at our entry types. Then that's where we'll be executing our trades, which will be on the M15, M5 for our M1 time frame. So also, if we can look clearer over here, we have a lacuna candle, or we can also say it's an SC or an OB. Okay, so over here we have a lacuna candle. As you can see, we have a lacuna candle. So probably the market is going to can come to this kind of point, okay, to mitigate the 50% of the lacuna candle, or it can also come to our SCB because there is inefficiency lying over here. Okay, so the market can do a lot of things, but as long as we have an idea that the market must come to this point before it can go up, or it must come to this point before it may go up, that's what gives us a clear mindset. Then us going to our H1 time frame, H4 time frame, getting many more other blocks and getting confused. So in our M15 time frame, for now, in this time frame, for now we won't see anything because it hasn't reached our point of interest. Okay, for now we are not going to focus on anything on our M15 time frame because it hasn't reached there. But immediately when the M15 time frame or M5 when it reaches this point, we are going to be looking at entry types. Okay, so let's just move to another page. Okay guys, so now we're looking at GBP USD on the daily time frame. As you can see, we have a bullish momentum over here on GBP USD. Okay guys, and one thing I want to tell is that I love using like USD pairs. I love USD pairs because they are more active. Okay, they are more active mostly when trading using this way, okay, or analyzing using this way. It's more active. And also I also like to take trades on the London and the New York session. If you do not know what is the London and the New York session, please go back to my videos and search for trading sessions. Okay, you will have a clear understanding of what I'm speaking about when I speak of the London and the New York session. So which are the times whereas you must be taking your trades. Okay guys, those are the times whereas you must be taking your trades if you want to be profitable in the strategy. Or else if you take in other sessions or any other time, you'll find yourself the market consolidating and you've entered your trade and emotions are triggering in. Okay, emotions are triggering in and you close your trade. So you don't want to find yourself in those kind of situations. As we're speaking, we're looking at GBPSD, we can see a very good bullish momentum, and over here we can see that the market failed to create a new higher high. It actually broke to the downside, and as you can see now, I think it's time for the market to go down. Okay, so we're just going to start with the basics, which is our daily low and our daily high. So over here we have our daily low, guys, and over here we have our daily high. Okay, we have our daily high. So as you can see, guys, as I told you that the market failed to actually create a new higher high. Okay, failed to create a new higher high. So basically we're looking at a breakout structure on this part. Okay, so over here we have our breakout structure, guys, to the downside. So we're expecting the market to get back to mitigate what, to mitigate our point of interest, okay, or our supply area. So now we can see over here we have our daily SC, and over here we have our supply area. So guys, this is one of the good this is what you've been actually waiting for, or this is something that it's actually happening, and I was speaking about in the previous pair, which was JPY. Whereas as you can see, the market has been creating, now the market has been showing us signals of a bearish move. Okay, so we can see that the market broke structure over here, and now the market must get back to mitigate the point of interest. It will be either our daily SC or our supply. So now the market is in our supply area. So as the market is in our supply area, we go into the M15 time frame and see if we can find any entry types. Okay, we're going to go to our M15 time frame and see if we can find any entry types. And one thing that always happens, guys, is that we always have a lacuna candle, but luckily this lacuna candle is just inside the supply, which gives us more confidence and another confirmation. Okay, this is a confirmation. This lacuna candle is just a confirmation, okay, that the market can be mitigating over this part. And also over here in the middle we have some bit of void. Okay, we have some bit of inefficiency over here, a bit of void to be filled. So many things can happen, guys, many things can happen. Let's just go to our M15 time. This is our M15 time frame. We can see that the market have been on the bullish momentum, and all of a sudden the market is just getting down and breaking structures on this part. Okay, so you can see, guys, now we're just going to get deeper to the part where the market has turned. Okay, as you can see, this momentum is just going to focus on this whole thing. Okay, now we can see from over this point that we have some sort of a range. Let's just take it to the side. So as you can see, guys, over here we have some sort of a range. Okay, we have a bit of a range over here, and as you can see, the market is getting down, and I can clearly see over here that we have some equal highs, and obviously over an equal high there's liquidity lying, and as you can see, this week has freed liquidity. So basically this will be liquidity. So this is a liquidity grab. The market has already freed liquidity, and let's take a moment to look at this part. Okay, as you can see, we had a bullish momentum. This one was breaking structure. We have a higher high, higher low, higher high. Over here we have our higher high. Okay, so over here on our high, we're expecting the market to come to at least this part and break and create a new higher high. But the market failed to create a new higher high, and the market broke structure over to this point. So I won't draw it because I don't think it'll come out as well. But the market broke structure on this point, okay? And the market came back to what? The market came back to mitigate the supply. Okay, the market came back to mitigate the supply, and it went down, creating what? Breaking more structure. So it gives us more confirmation that this is bearish momentum. This is a bearish momentum starting right now. Okay, this is a bearish momentum starting right now. So we can clearly see over here, guys, also that we have a break of structure. We can clearly see over this point that we have a break of structure. Okay, let's just adjust. As you can see, the market went back, and also over here after this breakout structure we had an SC. Okay, we had an SC, but it's also a supply. Okay, it's also a supply, mitigating which one? Mitigating this also supply. Then the market went down to the downside, and over here we can see that we had another breakout structure. And guys, over here we can see that we have an SC. This is an M15 SC. Okay guys, this is an M15 SC, and we can clearly see that the market went up to mitigate it and went down. And also over here inside we have another SC, which the market just already mitigated it right now. Right now as we are speaking, the market has just mitigated it. Okay, we'll just have it like this because it is a long week. Okay, it is a long week, so we'll just have it with our fibs 50% of the other SC, which is this one. So we would have taken our trade from the and also we have another liquidity over here which was grabbed. As you can see over here, guys, we have liquidity that has just been grabbed. Okay, it was a liquidity grab, so basically liquidity was freed. So also over here, guys, we have a liquidity grab, whereas liquidity was freed, and over here also liquidity was freed. Okay, but if we could, yeah, so liquidity was freed over there. So now the market just mitigated this SC. The market just mitigated this SC by taking its 50%. So now we have a clear confirmation that the market is now going down, and this is where we can take our trade. So if I saw this earlier, I would have taken my trade just over here. So the reason of taking our trades on an M15 time frame is to also have a lower risk and have a bigger reward. Okay, yes, so our stop loss can be just around over here. Just take it a bit up 7 pips. Okay, and our take profit will be, our take profit must be our daily low or our daily high. It depends on if you are buying or you are selling. Okay, it depends if you are buying or selling. So this will be a 1:22 risk ratio trade. It's actually 1:23 risk ratio trade. Okay, which is what everyone almost wants. Okay, which is a very good risk reward ratio. Then we are securing how much? 161 pips. It's a very good trade that we can be taking on GBP/USD. Okay, let's just unlock the sessions. You see now the session is not good. I will wait for the market to actually come and form a better setup, then I will be taking my trade. Okay, then I will be taking my trade. So guys, this is how you must analyze. Okay, I hope you like this method because it's easy, and I will make more analysis, and I hope I will make you will be able to understand when I analyze more using this way to you guys. Okay, so guys, I'm signing out. Don't forget to hit the subscribe button. Don't forget to give this video a thumbs up, and also comment down below and tell me what you think about this video. Don't forget to share it with your friends and family. I would like to thank you very much, guys, for your love. I appreciate your love a lot, guys. You showed me a lot of love. Thank you very much, guys. And I'll be sharing more content. Share it with your friends and family, and share it on your statuses. It is your boy once again, Legend Paul, and I'm signing out. Yes, sir.